Warren Buffett is not going to be happy with you if you panicked when the market went down this year roughly 22%, but now that the market's rebounding and going higher, if you're now piling your money in right now, but not on this dip right here, Warren Buffett has something to say to you right now. Let's take a listen.
If you get frightened by markets that decline and get excited when stock markets go up, I don't mean to sound particularly critical. I mean, I know that people have emotions, but you got to check them at the door when you invest. The world makes big mistakes, and surprises happen in dramatic ways. And the more sophisticated the system gets, the more the surprises can be out of right field. That's part of the stock market, and that's what makes it a good place to focus your efforts if you've got the proper temperament for it.
So did Warren Buffett capitalize on the dip that just happened? Well, he almost invested $10 billion. I'm going to play you the interview of him saying that in just a second. But Warren Buffett likes to buy when things are cheap and when they're on sale. And that is a great time to go long in your portfolio. Going long just means that you think the stock is going to go up, and you either buy the stock, you buy calls, or you sell puts. You just do some sort of bullish play on the stock to capitalize on a move that's expected to come. So let's listen to Warren Buffett a little bit more. And then remember, I'm going to show you the interview of him talking about how he almost made a $10 billion investment in this company. We'll go into that.
I certainly don't know. Greg doesn't know. Ajit doesn't know. Nobody knows what the market is going to do tomorrow, next week, next month, and nobody knows what business is going to do tomorrow, next week, or next month. But they spend all their time talking about it because it's easy to talk about, and but it has no value. I've never found anybody I wanted to listen to on the subject, and on the other hand, I've found that leafing through things like that big Japanese book that I can't read anymore, that's a treasure hunt. And every now and then you find something, and occasionally, very occasionally, but it'll happen again, that I don't know when. It could be next week, it could be 5 years off, but it won't be 50 years off. We will be bombarded with offerings that we'll be glad we have the cash for. And it'd be a lot more fun if it would happen tomorrow, but it's very unlikely to happen tomorrow. Very, very unlikely to happen tomorrow. But it's not unlikely to happen in 5 years, and then the probabilities get higher as you go along. It's kind of like death. I mean, if you're 10 years old, the chances that you're going to die the next day are low. If you get to be 115 or something like that, it's almost a cinch.
Berkshire holds over $300 billion in cash and short-term investments, representing about 27% of total assets, a historically high figure compared to the 13% average over the last 25 years. This has also led Berkshire to effectively own nearly 5% of the entire U.S. Treasury market. Beyond the need for liquidity to meet insurance obligations, is the decision to raise cash primarily a de-risking strategy in response to high market valuations? And I will add one line from another shareholder, Mike Conway, who asks, are you encouraged you may see some fat pitches coming your way?
We came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, and those decisions are not tough to make. When something is offered that makes sense to us and that we understand, and offers good value, and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will. If we've got $335 billion now in treasuries, we would rather have conditions that are developed where we would have like $50 billion or something like that. But that just isn't the way the business works. And we have made a lot of money by not wanting to be fully invested at all times. And things get extraordinarily attractive very occasionally.
Warren Buffett is critical about waiting for the right opportunity, the right time to pull the trigger and deploy all that capital, all that cash, all that money in treasury bills into companies that are trading below intrinsic value. But he said, big opportunities don't happen often, but when they do happen, they're going to come into masses. People are going to be panic selling stocks for whatever reason it may be, and he's going to have the opportunity to convert all that cash into treasury bonds to put their money into the stock market, whether they buy entire companies outright or just buy partial ownership of these companies to deploy the capital in a very low risk way when things are on sale. So when he was asked if he's deploying capital right now, the answer is no. Why? Well, let's look at this chart. So this goes all the way back to 1985, and it shows you the S&P 500 right here, and then the blue lines correspond to the PE ratio that the S&P 500 would be at if it was trading at that relative PE ratio. So historically, the PE ratio of the S&P is roughly like 17, and right now we're over 20, and yeah, everybody's like, oh my God, the stock market took this dip and it's still down from all-time highs, But that's not really saying a lot, because look at how high the valuation of the market was up here in this category right here. The market went down a little bit and it was getting closer to intrinsic value. But now that the market rebounded so sharply, it's now above a PE ratio of 20, which does indicate that the market right now is still a little bit overvalued. Go back and look at this period right here in 2000 when the market was at a PE ratio of almost 25. We all know what happened in the late 90s and 2000s when the market pumped straight up. We had a massive stock market crash after that. You could see what happened in this period in 2022. The market went above a PE ratio of 20. The market went down. So historically, when the market's trading closer towards these lower bands on the PE ratios, the market makes good moves going higher. But when the market's getting closer to this upper band of 20 to 25, it seems like the market usually goes down, or it just doesn't do a lot in the years going forward. Pretty much every single time that that's happened, the future returns of the stock market aren't going to be that good. And if you watch my other videos, you guys are going to be like, but Brandon, how come you sound so bearish right now? And usually you always sound so bullish. This is what matters the most, is the market valuation. Yes, Warren Buffett just said all this stuff, but it's really nothing that we didn't already know. Price is what you pay and value is what you get. The higher the market valuation is, the less you could expect your returns to be going forward. But if these companies continue to make a crap ton of money and their earnings start growing like crazy and interest rates start to go down, yes, the market could keep going higher for sure. So right now is a critical time in your portfolio to reassess your risk. And if you can't handle a 40 to 50% stock market drop from levels right now, you are not positioned to be okay going into the future. If you can't sustain a drop like that, you're going to be just fine.
There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a very short period of time, 3 different times. What has happened in the last 30, 45 days, 100 days, whatever you want to pick up, whatever this period has been, it's really nothing. There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a very short period of time, 3 different times. Nothing was fundamentally wrong with the company at any time, but this is not a huge move. The Dow Jones average hit 381 in September of 1929. It got down to 42. So that's like going from 100 to 11. This has not been a dramatic bear market or anything of the sort. I mean, however many years I've been old enough to trade stocks, got 17 or 18,000 days. There's been plenty of periods that just are dramatically different than this. I mean, when the day I was born, the Dow Jones was at 240. And that was August 30th, 1930. And between that and the low, it went from 240 to 41. I mean, so if people think that it made a really major change, it didn't. If it had gone up 15% instead of down 15%, people think they take that with remarkable grace. but if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy, because the world is not going to adapt to you. You're going to have to adapt to the world, and you will see a period certainly in the next 20 years, you'll see a period that will be in what somebody in the market described one time as a hair curler compared to anything you've seen before. I mean, it just happens periodically.
So what Warren Buffett just said about the state of the stock market kind of coincides with the chart that I just showed you a little bit ago about the valuation of the stock market, basically meaning this. The stock market only went down 15 to 20%. I get it that some individual companies feel a lot more than that, but it's not like we had this massive 50 or 60% full-blown stock market crash, full-blown recession, depression, all this bad stuff. This is just normal market volatility. And yes, when the market's a little bit lofty at a high valuation level, the market is often looking for negative catalysts such as tariffs and recessions and stagflation fears to drag the market lower. So yes, right now the market is a little bit expensive, and I see that, and Warren Buffett sees that too. That's why Berkshire, they didn't buy back any stock in 2024. They didn't do any share repurchases in 2025. He didn't buy back any stock in that whole time period right there, indicating that the market is a little bit overvalued. And Warren Buffett is one of the most patient investors of all time, but for whatever reason, he has hundreds of billions of dollars, and most people do not. So we have to put a lot of weight on what Warren Buffett is saying here. And I get it that a lot of people watching these videos, you're like, oh, it's Warren, he's old, he doesn't know what he's talking about. And yeah, maybe there is a little bit of truth to that, but I'm going to sit here and say again, you don't have $100 billion, and if you did, we would look at you as Warren Buffett, but you're not. So we have to value everything that Warren Buffett said here, ultra critical, and really understand this. The emotional aspect of investing is so underrated. Everybody is so happy when the market's going straight up, and then when the market's going red and going straight down, everybody's panicking, everybody's selling their stocks like crazy, everybody is buying put options for more downside protection. But in all reality, you should be buying stocks, you should be buying call options, you should be selling put options at a time when the market is cheaper. But that's just typical herd mentality in a stock market. People just buy stocks because they're going up and they're just selling because they go down. When you become a longer term investor and you buy into companies at a good valuation level and you be patient and then use stock options the right way in a very low risk way, you will scale to millions 100% of the time. But if you don't do it that way, and if you want to get short-term gains, you want to do double your money overnight, you are not going to win in the long run. You might win a little bit. You might follow someone on Discord and hop into Discord and follow their trades for a little bit. But I promise you, I bet you that if you would just buy into the S&P 500 and forget about it, you would outperform 95% of the people that you see on YouTube, 95% of the people that you see on X, on Instagram, wherever you look, because they are only showing you the wins. They're not showing you the losses and all that other stuff. So you're probably wondering like, okay, Brandon, I get that. So what are you doing in your portfolio yourself? So my main Charles Schwab trading account that I show on Course Members Discord, the $1 Million account, I am doing various things in that account to capitalize on this market dip. But as the market's rebounding and going a little bit higher, I am less likely to make bullish plays because the market is getting more expensive, like we talked about earlier. But when the market was down at the beginning of April, down, 15, 20% lower than it is right now, that was a great time to capitalize, to go long on certain companies that are cheap with a durable competitive advantage that you want to hold for the long run. You can make a crap ton of money doing that. And I was pretty much going against what everybody was saying. So many people were piling their money into cash. So many people were piling their money into gold and bonds. And I was like, this is a great time to buy on these companies that are going to change the future as we know it. And they're just on sale. They're just out of favor right now. So that's what I personally did. I bought some calls. I sold some puts. I made some plays on this dip and I capitalized, because every dip you have to understand that you want to capitalize on it. Now, I also understood that the market didn't go down 50%, it only went down 20%, so I'm not going to go over leverage myself at a time that the market went from 20% overvalued, so then it fell 20% from there, so it's now at like intrinsic value when it was at the bottom. I'm not going to go over leverage myself when the market's just at intrinsic value. When the market's very cheap, I will take on leverage. The market never fell to a very cheap level, it just went down to true intrinsic value. And if you got value out of this video, you're going to want to watch this video right here, because I just posted it a couple days ago, and it's more of the cracks that are showing in the market right now, the bearish situations where the market could keep going down lower. You're definitely going to want to check that video out. But don't forget about my stocks and options course. It'll totally change your life. Come into my course members only Discord. I'll show you all my trades, all the stuff that I do in there. It's going to blow you away. Click the link below to do that, and I'll see you guys later.